What is going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. Today was a crazy roller coaster. I want to give you an overview of what caused so much volatility, what shorts did, and everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So starting off, PCE came out first thing. As you can kind of see from the futures, or I guess the pre-market, there was a lot of optimism. So it came in lower than anticipated. So insinuating rate cuts, right? That's what the market was going to interpret all of this information as. But that was short-lived, lasted good about 30-40 minutes, give or take. During that time, it was really struggling with this very strong resistance point, 699, and this has been something I've been saying over this last several trading days. SoFi was going to struggle with. So as soon as it kind of hit that mark, I did pretty much similar to what I did last week. I did sell calls, $7 strike price. This week I got around $81, still not all that crazy, but still it is kind of free money. And then the market just tanked. So this is where a lot of people don't necessarily know exactly what caused it, but it was linked, in my opinion, to algorithmic trading, because across the board there was fairly low volume. So whether it be with SoFi or many other stocks out there, all had very low volume. So in my opinion, I think it just was AI being told to kind of bring down the broader market, which as you can kind of see was somewhat short-lived, and then you had somewhat of a recovery. But it is very interesting to see. So a lot of the broader brick and mortar banks did go up today, but SoFi, as you can kind of see, did close 0.14%. So it recovered fairly well, but majority of the day, it was in the red. So if you kind of look right here, it does show SoFi being 1.15% in the red. So obviously that hasn't fully updated, but JPM, BAC, and then obviously Citibank, all very much in the green today. So it's kind of interesting. Wall Street likes to categorize SoFi as a bank and nothing more than that when it's beneficial to them. And then other times it's fintech. It's just because tech obviously was pulling down. I'm going to play this video near the tail end. It kind of talks on how just evaluations on tech are being questioned and whatever else. So this is really another sign of manipulation and just how Wall Street does not understand what SoFi truly does do, in my opinion, of course. So let me know your thoughts. Today there was no news, no SEC filings from SoFi, so it was kind of at the mercy of the broader market. You did have shorts return 1.33 million shares because obviously, why would they double down, right? The market was kind of doing all the damage for them. They didn't really have to do anything. So over the last several trading days, they've increased a significant amount. Yesterday was 4 million or 4.5. Day prior was 2.5. So they didn't really have to do anything, right? They just in the end didn't want SoFi to close above $7. But 17.35% of the free float is being shorted. That works out to be 180.2 million shares overall are being shorted. Cost to borrow average is 0.95%, and then utilization is 76. So kind of interesting. And like I said, with PCE coming out better than anticipated, you would assume that this would have adjusted. So this is for the September 18th, 2024 meeting. Previously, it was at 44. Now there is a roughly about 46.6% likelihood of a rate cut. So it went up slightly. So it kind of goes to show that the market, did want to see good inflation data, but it didn't necessarily translate to, hey, there is going to be rate cuts on, for instance, September. So kind of messed up market. So let me know your thoughts on that in the comments below. But 2.56 million in calls, 1.85 million in puts, very evenly divided, of course, with it obviously trading very close to $7. A lot of the volume being done was just neutral, collecting premiums. You had 37% optimistic though, which that does kind of roll over into next week. So there's some optimism for that. But as you can kind of see, there is a very strong wall. So this is the open interest. It did eventually get to 40,000 at that $7 strike price, and then 25,000 at the $7.50. So if SoFi was to have stayed closer to that $7 range throughout the trading day, this is where you would have saw shorts a lot more active to ensure obviously SoFi wasn't getting above $7. Going into next week already, you do see a wall, 17,000 at the 7, 12,000 at the 750, and then 11,000 at the 8. So not necessarily the best, and I do believe consumer linked data is coming out next week, so I'll kind of cover that in my video over this upcoming weekend on some full expectations, as I always do. One thing that I wanted to share with you is big money decided to buy after hours based on the timing, as you can kind of see. So 1.68 million to 1.21. There was a fairly large one right here, so 18.8 million, and basically, yeah, that was it. So a lot of big money was looking at SoFi today, more specifically during the later part of the day. So that helped obviously SoFi and many other stocks kind of have this recovery. So kind of a good thing. Dark pool, very, very popular today. So that is linked to shorting as well as larger institutions. So definitely it's been on people's radar today. So I think that's one thing that I've always said SoFi has struggled with, but 1.68 million, 1.28. When it comes down to dark pool, you don't necessarily know if they are buys or sells because it doesn't actually show the bid or the ask or anything like that, versus the secondary market, it does. But like I said, on the actual chart itself, it did bounce off of this pivot point, and in fact, it actually did bounce off of this S1, so $6.79 was that strong support. And in, I believe it was Wednesday, that S1 didn't really hold up worth anything. But on Thursday and as well today, it did hold, and it kind of caused a nice reversal as well. So that aided in SoFi going up. So definitely watch for that to continue to hold going into next week, and then vice versa. 699 will be that next strong resistance point. On the actual chart itself, very volatile day, but still low percentile of the Bollinger Band. You do see a nice bullish deviation on stochastic as well. You do see it at 18, so that still is considered quite oversold, and retail was buying the dip today. So kind of a good grouping of data points. So still some optimism going into next week, but knowing the manipulation with SoFi, it will once again struggle with that $7 range. So I just wanted to quickly play this video because it does break it down on evaluations and potentially what caused this, or why AI was kind of told to sell off the broader market.
It does take us to our talk of the tape. There was no sell in May and go away as the major averages pace for their 6th positive month in 7. Big question now, what now? Let's ask Cameron Dawson, Chief Investment Officer for New Edge Wealth, here with me, as you see, at Post 9. Welcome back. It's nice to see you on this Friday, last trading day of the month. That is the big question. What now? April was bad. We roared back in May. What do we do from here?
I think we have to appreciate just how much deterioration there has been under the surface and a lot of churn. The market's been a bit like a duck, calm on the surface, but a lot of commotion underneath. And what that's resulted in is deterioration in breadth. Only about 40% of names are above their 50-day moving average. We've seen a waning of momentum, so the market's kind of losing some steam. We think that translates to a bit more volatility. It's not the end of the world. It's not to say the rally is over, but to say that we have some more churn to happen. That volatility is likely buyable as long as growth estimates hold in, but that's what we will be watching for in June.
Is the narrowness that you point to unhealthy, or is it just fine?
It is disconcerting to see the amount of deterioration we did in some of the broadening out trade. It evaporated in a second over the last 2 weeks. You saw industrials completely reverse all of their relative performance over the last year or the last year to date in just 2 weeks. So some of that is concerning to see the deterioration in trend, which again just suggests that there likely is some more volatility to go.
What gets the trend going again? Is it because of a growth scare? Is it in part because rates had backed up? What is it?
Well, what got this trend kind of deteriorating is I think that there has been more question about rates and the Fed, and this question of if we could have a Fed hike back on the table. We don't think the data as it stands necessarily supports a Fed hike at this time. We think that PCE is just in this kind of middling territory where it's not cool enough to say that they can cut, but it's not hot enough to say that they can hike, which means that we did see a little bit of a lift in the market today on that data, maybe taking those hikes off the table.
Well, let me ask you this. Why don't we see more of a lift in the market today on the data?
I think we move very far, very fast. Tech is what's dragging this market down. And if you look at tech valuations, they're trading back to 2021 highs. It raises the question, is 28.9 times or around 29 times the ceiling for tech? Yes, the earnings are great. You're seeing earnings revisions move higher for tech. However, positioning is very stretched. And you had Jeff DeGraff on the program yesterday, and he talked about option positioning within semiconductors being extraordinarily stretched. So if tech doesn't work, that's why this market has trouble.
But tech is...
So yeah, there you have it. That's what ultimately caused a lot of volatility. It's just multiples are being questioned right now, and interest rates are kind of flip-flopping, right? So let me know your thoughts. Don't forget to hit that thumbs up. Give yourself a shout out. Did you buy SoFi? Did you sell? Did you do options like myself? What did you do? Don't forget to hit that thumbs up and subscribe. Hopefully everyone has a good weekend ahead of them. And with all that, appreciate all of you watching.